why these ratios matter. When I published the January 15th Macro Report 2B, I talked about a few important sentiment ratios. These are simple cross-asset tools that show where money is flowing, and just as important, where it is not flowing. These ratios are not just for crypto traders. They help anyone understand when investors are hiding in safe assets, moving into hard assets like gold and silver, or taking more risk. Today, we'll revisit those same ratios with fresh context and see what they may be signaling for 2026 and beyond. When stocks slow down, gold shines. In my January report, I warned that if the S&P 500 to gold ratio broke down on the higher time frame, equities could slow in 2026. And that's exactly what we're seeing. The ratio has dropped sharply from above 37 last year to around 16. What does this mean? This ratio tells us how many ounces of gold it takes to buy the S&P 500. When the ratio falls, gold is outperforming stocks. That's usually a risk-off signal. When investors feel uncertain, they move into defensive assets like gold. And gold's strength in 2025 confirms that. Gold made over 50 all-time highs. It returned more than 60%. Why? Persistent inflation, geopolitical tensions, heavy central bank buying. At the same time, the S&P 500 is historically expensive. When stocks are expensive and the economy slows, investors hedge with gold. That's why I believe 2026 could be slower for equities than most people expect. Silver's explosive move now. Let's look at the S&P 500 versus silver. Back in January, this ratio was already breaking down. Today, it has collapsed from above 200 to around 83. That tells you one thing. Silver has been extremely strong. Silver surged massively, far outperforming stocks. Why did this happen? Several reasons aligned. Weak US dollar, softer Federal Reserve tone, strong Chinese buying industrial demand from AI, solar, and electrification. When silver rises this aggressively while stocks move sideways, it signals rotation into hard assets. But remember, silver is more volatile than gold. It can move up very fast and also fall very fast. That's why I suggested rotating some silver into gold. Gold usually corrects less during pullbacks. Altcoins are still waiting. This ratio compares altcoins, excluding Bitcoin and Ethereum, to silver. Back in January, it was sitting at major support. That told me altcoins were not yet the focus. Metals were, and that hasn't changed. The ratio has dropped significantly, showing that silver has strongly outperformed altcoins. Even when Bitcoin made a new all-time high, it later underperformed while silver kept rising. That tells us capital has been moving into hard assets, not speculative tokens. Crypto weakness wasn't only about macro, it was also internal. Regulatory uncertainty, ETF outflows lower liquidity. That's why I keep saying a falling US dollar does not automatically mean alt season. Right now, liquidity and equity flows matter more. Until those improve, metals may continue to lead. The silver and gold relationship. This ratio shows how silver performs compared to gold. When the ratio rises, silver is outperforming gold. That usually happens early in a bull market. Silver moves faster because it's more volatile. But here's the key. When silver runs too hot, it often pulls back harder than gold. That's why I converted part of my silver into gold when the ratio became elevated. Recently, the gold-silver ratio compressed significantly, confirming silver had run very far. But long-term, I remain bullish on both metals into 2029 to 2031 because compared to money supply, both still look undervalued. The strategy is simple. When silver overheats, rotate into gold. When silver deeply corrects, then rotate back into silver. That's how you ride the bigger cycle. Inflation creates opportunity. Now let's talk about ETH versus oil. This ratio shows how Ethereum performs compared to crude oil. Here's the pattern. When oil rises sharply, inflation pressures increase. That hurts risk assets like crypto. But when oil cools down, inflation fears ease, and crypto rebounds. Right now, the Ethereum-oil ratio is sitting near macro support. Historically, when Ethereum enters certain buy zones during oil strength, it often rebounds strongly within months. We recently saw Ethereum drop into a major buy zone and bounce exactly as expected. The message for non-crypto viewers is simple. Watch energy prices. When oil peaks and inflation slows, Ethereum often moves quickly. Ratios are a roadmap. These ratios are not magic. They are tools. They show how different asset classes interact. SPX Gold tells us when investors seek safety. SPX Silver shows when industrial metals lead. Total 3 Silver prevents premature alt-season calls. Silver Gold helps rotate between metals. Ethereum Oil highlights inflation cycles in crypto. When used together, they create a roadmap. And this roadmap guided my calls in Report 2B. It continues to shape my outlook for 2026 and beyond. Because markets are not random. Money always flows somewhere. The key is knowing where and why.